Are my medical expenses eligible for a tax deduction? Imagine saving money on your taxes just by keeping track of your medical bills. It might sound too good to be true, but many medical expenses can actually lower your taxable income. Let's see how this works. The IRS allows you to deduct certain unreimbursed medical costs, but only if they go beyond a specific amount. That amount is 7.5% of your adjusted gross income. Your adjusted gross income is your total income minus some deductions, and you find it on your Form 1400. For example, if your household income is $40,000, 7.5% of that is $3,000. Only the medical expenses that are more than $3,000 can be deducted. So, if you spent $10,000 on medical bills, you could potentially deduct $7,000. If your income is $50,000 and your bills are $10,000, 7.5% is $3,750. That means you could deduct $6,250. Now, what counts as deductible medical expenses? The IRS says costs for diagnosis, treatment, or prevention of a medical condition are eligible. Payments to licensed doctors, dentists, surgeons, chiropractors, psychiatrists, and psychologists qualify. You can also deduct insurance premiums for medical or long-term care insurance you pay after taxes. If your employer pays these premiums, they don't qualify. Prescription drugs and insulin are deductible, but over-the-counter medications usually are not unless a doctor prescribes them. Medical supplies like eyeglasses, contact lenses, hearing aids, dentures, crutches, wheelchairs, and service animals are also deductible. Hospital stays and nursing home care count, including meals and lodging if the main reason is to receive medical treatment. Travel costs for medical care, like mileage, bus fare, parking, and transportation, can also be deducted. But expenses for general health and wellness, like vitamins or nutritional supplements, do not qualify unless they are for a diagnosed medical condition. Also, if insurance or FSA funds paid for your expenses, you cannot deduct those costs again. To claim these deductions, you need to itemize your deductions on Schedule A of your Form 1400. You should only itemize if your total deductions, including medical expenses, are more than your standard deduction. For the year 2025, the standard deduction ranges from $15,750 to $31,500, depending on your filing status. So, if your total itemized deductions are less than that, it's better to take the standard deduction. Remember to keep all receipts and records of your medical expenses. The IRS might ask for proof during an audit, and organized records make it easier. For Latino families managing healthcare costs, understanding these rules can help you save money come tax time. If you support family members in the United States or abroad, only expenses for yourself, your spouse, and your dependents qualify. A dependent must meet IRS rules, like being a U.S. citizen, resident, or national. When preparing your taxes, consider whether itemizing makes sense for your situation. Working with a tax professional or using tax software can guide you through the process. You will need to complete Schedule A and attach it to your Form 1400. Calculate your adjusted gross income, find the 7.5% threshold, and add up all your qualifying unreimbursed medical expenses paid during the year.